In the previous video, we looked at how to close the general ledger when the business made a net profit. So if you haven't watched that video, go back and watch it before you watch this one, because there are a couple of little things in there that explain a bit of theory that I'm not going to cover here, just for the sake of duplication. But what's important is that you can follow the procedure for closing the general ledger, whether the business makes a net profit, like in the previous video, or in this case, example number 2, whether it makes a net loss. So it doesn't matter, we follow the same 5 steps. Step 1, close all the revenue accounts and sales returns to profit and loss summary. Step 2, close all the expense accounts to profit and loss summary. Step 3, transfer the profit and loss summary account to capital. Step 4, transfer drawings to capital. Step 5, balance the capital account into the next period. So in terms of the why we do this for some of these steps, that was explained in the video for the net profit. So make sure you go and watch that one first. I'll put a link to that video in the description in case you haven't watched it. But it doesn't matter, we follow the same 5 steps. So let's say in this case, now just looking at the trial balance, we can't tell there's a net loss. Now I've said there's a net loss, but it doesn't matter whether we don't need to manually look here first and go, do we make a profit or a loss? And this trial balance is incomplete. It just says extract. And that's because I've only put the things we need for this particular topic. I haven't put any assets or liabilities. We've only got revenues, expenses, capital, and drawings. And we're being asked to close the general ledger, transfer the net profit or loss, and transfer drawings on the 30th of June. And our document will be Memo 1. So, step 1, close all the revenue accounts and sales returns to profit and loss summary. So if we look at our trial balance here, we can see we've got 3 revenues: cash sales, credit sales, and inventory gain. What we don't have is sales returns, because maybe there weren't any. So some questions will have it, some questions won't. So in the previous video, we did have sales returns. It did make it a little bit trickier, but in this one I've left it out, just because the question might not have it at all. And that will make it a little bit easier. What we're going to do is we're going to look at the general ledger and say, well, at the moment, there must be a cash sales ledger with a credit balance of 90, a credit sales ledger with a credit balance of 70, and an inventory gain with a credit balance of 5,000. And what I need to do is close these. It says transfer or close them to profit and loss summary. So I make this account for one day only, the last day of the period, which in this case is the 30th of June. And I'm going to do all this in my general journal. So first thing I'll do is start with the date. You can do the debits and credits in whatever order you want. I'm going to go here first, and I know the cash sales for June of 90 have nothing to do with the cash sales in July. I need this cash sales ledger to be blank at the end of June, so going into next month, I can calculate the profit correctly. So what I'll do is I'll do a debit there to cash sales to close it down at the end of June. Likewise, I'll go to credit sales and do a debit there, and I'll go to inventory gain and do a debit there. So I've got 3 total debits. And what I'd say is I'm closing them to profit and loss summary. So if they're debits here, it must be a credit here. Just one giant figure. We don't put them separately, as I explained in the previous video, but the total of these is 90, 70, and 5. That's a total of 165. And now I'm just going to do my referencing. So for the debits, the reference here will be in this ledger here. So I'll write profit and loss summary. And here, we explained in the previous video, we just write revenue accounts. I don't need to write all their names. Cash sales / credit sales / inventory gain. I couldn't possibly fit that in the space. And most importantly, I don't need to put them all on separate lines for separate amounts. One giant credit that just says revenue accounts 165. And now in this trial balance, the whole purpose of doing this is to close these revenue accounts. So they now don't exist. We'll put out, if we get asked for a narration, closing of revenue accounts, and these are gone, because they shouldn't carry forward into next period. Step 2, let's close all our expense accounts. So in this case, looking at our trial balance, what's left? Well, the revenues are gone, they've been closed, but that leaves these 5 expenses here. And they're all debit balances. So in our general ledger, there will be 5 ledgers for 5 expenses here, and each one has a debit balance here, which matches up with these numbers here. And where I'll close these to is my account that exists for one day, called my profit and loss summary account. And you can see at the moment, the revenues have shown up on the credit side. And that makes sense, because revenues increase owner's equity, and profit and loss summary is an owner's equity account. So therefore, they've shown up on the credit side here. What we're going to do in the general journal now is we'll put our date. I'm going to shut down each of these expenses here. So if they've got debit balances, I'm going to shut them all down with credits here and here and here and so on. I'm going to do that first. You can do the debit first, but I'm going to do credit here to cost of sales. That closes it down. And so now its balance is reset to 0. So it's nice and blank for next period. Discount expense, I'm going to shut that down with a credit there. Insurance, I'm going to shut that down with a credit there. Inventory write-down gets shut down with a credit there. And that leaves wages, shut down with a credit there. I've left the referencing blank, that's just the way I do it, but you can do the referencing immediately if you wish. But I just leave it blank. And now I'm going to do my one big debit. I've got all these credits, but no debit. I'm going to do it here. And that must be into the profit and loss summary, all my expenses. And if you add these numbers up, you'll get a total of 175. And it makes sense that they're a debit in profit and loss summary because it's an owner's equity account. What do expenses do? Their definition says they decrease owner's equity, so it makes sense that they would show up as debits there. I'm going to do my references, and I'm just going to do one giant reference that says expense accounts rather than referencing them all individually or putting them on separate lines. And for all the expense accounts here on the credit side, the reference is always the same, profit and loss summary. Do a narration, closing of expense accounts, memo 1. So I've now closed all the expenses, so looking at our trial balance, all the revenues are gone already. Well, now, so are all the expenses. Step 3, transfer the profit and loss summary to capital. So at the moment, capital has a balance of 80,000 on the credit side, so that'll be here. At the end of June, the balance of capital is 80,000. What we've got to do is we've got this profit and loss summary account. We've got revenues of 165, expenses of 175. We've got to transfer a profit or loss to capital. And we're going to do that in our general journal. So what we can do is if we look at this particular case, the revenues were 165. The expenses were 175. Well, that must make equal, in this case, a net loss of $10,000. So what we can do is we can either do the maths or we can apply a bit of logic. So let's do the logic first. The logic is I've made a net loss. So if I've made a net loss, that will decrease owner's equity. And capital is an owner's equity account. Now if owner's equity goes down, that's going to have to show up here as a debit. So that's the logic. So if it's a debit here, it must be a credit there. I don't usually do it that way. What I do is I say, well, I know profit and loss summary account exists for one day only. It can't exist tomorrow. It only exists for the last day of the period. So what I'm going to do is balance it to 0. How do I balance any ledger? I add up the bigger side, put it there. I put the same number on the same line there. I subtract away 165 from 175 and I'll get 10,000 here. Well, that must be my profit or my loss because I said it's going to be a $10,000 loss. So what I'm going to do is I'm going to do a debit to capital because capital is going down. And then that would explain this number here because 165 and 10 equals 175. And now the profit and loss summary ledger equals 0. All I've got to do is my referencing. So capital will reference profit and loss summary. And here for profit and loss summary, there's the credit. I'll find the debit in the capital ledger. We get asked for a narration, transfer of net loss to capital on memo 1. So, did that all make sense? Well, we said capital was a debit. Why? Because we made a net loss. What do net losses do to capital? They make it decrease. And the rules of debits and credits say when you decrease an owner's equity account, that's a debit. Step 4. Transfer drawings to capital. So we can see we've got drawings of $15,000. Well, what that means is, we looked at this in the previous video, is drawings are actually period specific, just like revenues and expenses. They are not an expense, but we still close them anyway, and we said there's 2 reasons. So we can calculate our capital this period, but also reset drawings back to 0 so we can calculate drawings for next period. So go and watch the previous video for the theory as to why we're doing this. But at the moment, we said there's a capital ledger with a balance of 80. There's drawings of $15,000. Well, what we should do is drawings are going to decrease capital. So that's a debit. So they should show up here. And then we should decrease drawings itself with a credit there. So let's do that in our general journal. We start with the date. I'm going to do a debit to capital there and a credit here. to drawings, and now that is reset to 0. So one thing I forgot was we already have this debit here from the previous step where we transferred the $10,000 net loss, so that was already there. And what we're doing now is transferring the drawings here. Drawings are decreasing owner's equity, so they're going to show up there. And now drawings is blank, reset to 0. Do an oration, do our referencing. So in capital, I'll put drawings, and in drawings, I'll put capital. And if we get asked for an oration, we'll say transfer drawings to capital memo 1. That just leaves step 5, balancing the capital account into next period. So we said assets, liabilities, and owner's equity accounts are balanced, not closed. So here's our capital ledger at the moment. The balance is 80. The net loss decreased it by 10. The drawings decreased it by 25. Well, I've got to balance it now, so I add up the bigger side, which is credit. Write the same number on the same line on the debit side. 80,000 minus 10 minus 15 is 55,000. And that's at the 30th of June. And what I do is I carry that balance forward as a credit on the 1st of July. And what we say is this now represents how the owner's equity section of the balance sheet will look. So if we take this capital ledger, what we often don't get told in this balance is, well, that's the balance at the end of June. Maybe at the 1st it was different. Because there's no capital contributions ledger, we would need the question to tell us, on the 1st of June, the balance of capital was 65, not 80. And we'd need the question to tell us, well, capital contributions were $10,000 cash on the 21st of June, and laptops of $5,000 on the 27th of June. And what we can do now is we can now recreate or mirror the owner's equity section of the balance sheet. And we learned earlier in this chapter that will be capital at start plus capital contributions. In the previous video we added a net profit, but here we'll take a net loss. We'll take drawings and we'll end up with capital at the end of the period. So it says here the balance of capital was 65 at the start. The capital contributions were $10,000 cash and $5,000 laptops. We don't split them up, we just put one giant figure of 15,000. Take out the net loss, well that was this number here, 10,000. Take out the drawings, well that was this number here for 15. And if we get our calculator and do 65 plus 15, take 10, take 15, that balances to 55, which matches exactly our balance going forward into July. So that is how we do it for a net loss. So now we've done a net profit and a net loss, but the point was the steps are actually identical. So that's what you've got to remember and take good notes on. Step 1, close all revenue accounts and sales returns to profit and loss summary. Step 2, do the opposite now. Close all the expenses to profit and loss summary. Step 3, transfer any profit and loss to capital. Step 4, transfer drawings to capital. And lastly, step 5, make sure you balance the capital account into the next period.